And we are starting. Hello, everyone. There are people coming in. Still, thank you so much for being able to join us. I hope that you are safe and that you are you have everything that you need, or everything that you do need will be provided for you during this time and what we are in right now. I'm going to let Arlene take it away. Arlene is our Director of Partnerships at Cannaclusive. We are very excited that Courtney Richardson, AKA the Ivy Investor, has made time, given her busy schedule, to be with us. And I'll let you take it from here. I'm going to just be the Wizard of Oz and not do much else. Go ahead.
All right. Can you hear me, guys?
Yep.
And can you see me?
See you. Okay,
great. So just wanted to say thank you again for coming out tonight, because we are all in our living rooms and enjoying this important conversation. So what I want to start off with is to introduce Courtney. I'm going to do a little bit of the intro from her bio, and then we're going to really just kind of get started. So pardon me when I look away because I'm looking at my other screen. So Courtney Richardson founded the Ivy Investor, the resource for women seeking to navigate the maze of the investment world in ways that make sense. Courtney is currently an attorney and former stockbroker and investment advisor with 15 years of experience in the financial services industry. And I'm going to not read the whole thing because there's this whole post that has all the information, and Courtney's amazing, and that's why we have her. So I want to just kind of let her talk a little bit why she decided to even get started on this path. So Courtney, please go ahead.
Thank you so much for having me. And it's always a pleasure to have a conversation with amazing, wonderful Black women, just to us to vibe out. So how I got started in the Ivy Investor, I want to say like, it was like, yeah, it was all planned out. No, it really wasn't. So it all started because I was working at a law firm and I hated working at the law firm. And in the interim, I had all my friends calling because they were like in life transition saying, hey, Court, you know, I'm about to have a kid. Should we do a 529 plan? I'm about to leave my job. Should I roll my 401k over, or should I keep it there? You know, oh, I'm interested in investing in the stock market. What do you think I should do? And I'm like, oh, hey, listen, I have to bill, you know? So I can't be on the phone with you. And what I noticed, and having these conversations with so many different women from so many different walks of life, is that nobody had a clue about what they were talking about. You know, they knew that they wanted to invest in the stock market, but they were like, well, what is a stock really? They knew that they had retirement accounts that they were receiving matching funds from, but they were like, what's a match? What is maxing out? What is a 401k really? Like, had a lot of questions. So for me to even say to you, if you should roll over your 401k, or if you should keep it there, or have any of those real conversations about what your next steps are, we have to kind of have a base level of understanding. So I was like, I don't have, 2 hours to bring you up to speed, so then we can talk about your options. So I said, okay, I'm going to give you a blog. Here's a basic post. You can go there, and then we'll talk about it after you kind of digest that. That started in 2014. And then over time, people are like, well, yeah, I need more. Do you have a class that I can go back and watch? And I'm like, no. But I could come up with one. So I ended up teaching. My first couple of classes were about stocks, just basic stocks. Then I started teaching about cannabis because a lot of my students were asking me, they were like, hey, I'm really interested in stocks, but you know what I'm really interested in?
Right.
And it was just like, that deep, that little, like,
right.
You're like, whoa, wait, okay, all right. Like, I don't know much about it other than you smoke it, and a couple people have some edibles, I get it. But beyond that, I don't really, this is like 2017. I'm like, I don't really know that much about it, but I can find out. So then when I started looking into it, I was like, oh, this is deep. And it was deep from the investing side, but it was deep from the political, socioeconomic side. And when you kind of start getting into that conversation, you say to yourself, you know what, people of color, women of color, Black women need to be investing in this space because, we are probably the most adversely affected by the war on drugs. So it's like, how do you kind of even the playing field? And then when you look to see who's opening dispensaries and who's, becoming grower processors, the level of capital that's required is not something that we just have, oh, let me go look in my trunk, or let me go pull those funds out of my trust. It's not something that's common for us. Not that it doesn't exist, but it's not common. So it's like, how do we get our kind of piece of the pie? Like the Jeffersons, how do we get that? So that was the conversation that I started to have when we're starting to talk about investing in cannabis and investing generally.
Well, thank you. So I kind of want to jump right into the question that is kind of looming on all of our minds, which is the recession that is pretty much here. So what makes this recession different and difficult, even though we're in the beginning, given the insights that you have and some information you may be a little bit more privy to?
So so here's the thing. This recession is different. All the recessions that we've had before were like kind of business, I wouldn't even say business shutdown, like business failures. So we had the .com bubble. Everybody had a .com, you know, it's pet.com, people.com, so-and-so.com, .com. So when that kind of, and everybody was excited about it because it was like kind of the millennium, it was the turn of the century, and everyone was really excited about that. So when everybody kind of realized like this whole .com situation is not sustainable, then things started falling down, you know? And then you look at companies like Amazon. Amazon kind of came through the .com bubble, you know, really it started selling books. I forgot that Amazon was selling books, honestly. And then, you know, it's kind of made this way to where it is right now. So that's kind of a company that was able to kind of pivot and maintain. And I want to kind of bring up the idea about pivoting. Pivoting is so important, and that's something that's going to continuously come up as we navigate this recession, because life is going to be very different for multiple reasons on the other side of this. And I mean, and that means that life is going to be very different in terms of who's going to be here with us. Right. And that's a really real situation. Right. But then also kind of what this world looks like. So I like to share those types of ideas and things in that perspective. So to kind of go back to your original question, now that we've had that conversation, the cause of it is this is the first large scale pandemic since 1918 that has affected the world in this way. So we've had a couple of flus in the interim, like that. There was swine flu, there was kind of H1N1. I think they might have been the same. I don't know. There was Ebola. There was a lot of different things that kind of happened in the last, 20 years. But prior to then, there was a couple of viruses or kind of strains of viruses that came through like in the 50s and the 60s, but never on this level. The only thing that's really affected us like that was, I think it was called the Spanish flu, and it was like 1918. So, but the stock market wasn't the way it was. It was actually before the big crash, which caused the Great Depression. So this is like our first, go around with this type of issue, this type of genesis of a recession. Now, I like to tell people generally, and I've been having this conversation for maybe the last year and a half, is that when the stock market gets to a certain level, it's kind of like Jenga. Anything that happens, will kind of push it over. I mean, I don't know if you've ever played Jenga with a whole bunch of drunk friends. It just anything, So, Tim decides that he wants to like sway some way, and then there goes the big pile of things. And that's really what happens to the stock market. The president, now granted, that's been going on the whole time. The president sneezed funny. Oh, there we go. There goes the stock market. There goes like 10% off the top. So again, it was just a very delicate balance when it started. The stock market hit its all-time high, I believe it was February, I should say the Dow hit its all-time high as of February like 12th or so. And then within less than a month, we're at, we're in a bear market, which means it's a 20% decline from a high within like a month or two. That's the definition.
Explain bull and bear really quick for people who don't understand what that means?
So think of it, I tell people this way. So when you're thinking about a bull market, a bull has horns that kind of go up. So you're thinking that like bulls are fast, they're furious, they're things that kind of run kind of quick. So a bull market is a market that is on its way up, it's coming up. It's peppered or kind of, it's one of the big things about it is that people are optimistic about the future. They're excited about what's going on there, and that's causing, prices to go up. So, just remember what causes price to go up. When you go to, we'll say, I don't know, we were talking about hair earlier. We go in a hair store and there's only like 3 ponytails left. You know, people are going to run after them, and at a certain point, they're going to say, "Well, we only have 3 ponytails left. We're going to sell them to the highest bidder because we can, because people want these ponytails." Same thing with the stock market. You know, everybody is, you know, they're very excited, so they're going to be willing to pay more. So let's flip it on the other side, and you have the bear market. So I think when I think about the bear, I think the bear is like laying on stuff. I mean, as you can see, like I'm laying on the side. But I mean, we're thinking about it's a very heavy thing. It's pushing things down. That's the bear market. And basically it's one of the biggest drivers and emotional drivers of the bear market is fear and uncertainty. So people are saying, hey, I don't know what's going to happen. I'm going to pull my money out of the market. I don't know what's going on. I'm going to pull my money. And as people sell, the prices go down because you have more sellers than buyers. So right. That's kind of what pushes it down. So that's what your bear market is. So that's what it kind of looks like, or that's kind of the practical implications of the bear market, of what it looks like for an investor. So like I said, from what we consider to be a bear market, so you have 2 things. You have a correction and you have a bear market. A correction is 10% from a most recent high, and then a bear market is 20%. And I think we hit, I think, as low as 23%. It popped up a little bit, and then it's kind of like leveled out a little bit, but every so often it's a very uneasy, very kind of wiggly wobbly kind of market. And a lot of people are like, what do you think is going to happen? I'm like, I don't know. I'm watching it just like y'all. You know, I mean, there's some certain things that I see that are very reminiscent of some other places in the market, places that we've been. When I mean, like I was trading, as I was a stockbroker at the time the market crashed in September of 2008. So it kind of, some of these things are a little reminiscent, but again, the cause is different. Before it was, you know, irresponsible lending and over leverage in 2008, which is the same thing that caused 1929. So this one that we're looking at is really different because we have, you know, we have this virus, we have COVID-19 that's causing the disruption. But not only is it causing the disruption, is that with these other kind of, I should say, you know, other recessions and Great Depression that we had, you know, there was kind of like an end in sight.
Right.
But here you don't have an end in sight until you get this thing contained. And until it looks like it's spiking. So if it's spiking, that certainly means we're not going to get it contained. So that means that we're not going to get any type of leveling out of the stock market. And to give you some other kind of clarity, the stock market crashed September 2008, but it didn't hit the bottom until March 2009. And like, we kind of had like I don't want to say we had a date certain, but we pretty much had an idea of kind of like as the foreclosures were happening, because the banks were falling in September. They were falling. I think the first bank fell, like basically collapsed, I think in August, and that was out in California. So they were kind of, all these things were going on when the stock market was crashing. So here we're also going to have a lag of the economy, because we have, I mean, one of the bigger things that we've seen is, I've been telling people, it's exposing all of the problems of the economy and all the issues that we've had. I mean, on a structural level and also on an economic level. And what I mean by a structural level, like, we have a real healthcare problem. Exactly. Like a real healthcare problem. And now we're starting to see it, and you can see the healthcare disparity. And I love the fact that we're having the conversation about cannabis in the concept of healthcare disparities, because we can see that all the NBA players that need to get tested got tested. But I have a best friend who lives in Colorado who is exhibiting symptoms but does not have a fever. She has a suppressed immune system, or rather a compromised immune system, and she can't get a test. Right. But you mean to tell me all these other people with money can get a test, but she can't?
It's completely exposing all of that.
Exactly.
Now, I do want to move into just a little bit of, what do you think people should be focusing on about their money? If they have some money, if they're looking for some money, if they've decided to pivot, what should people be focusing on building? If they have capital, and if they don't, what should they be looking at? Because you mentioned pivoting before, so want to kind of talk a little further about that.
So more money, more money, more money, more money. Cash is king. I'm going to tell you that again. More money, more money, more money, more cash. Cash is going to be king. And a lot of people get excited about credit. And I want to kind of debunk the idea of credit versus cash. People are like, people are saying, well, I'd rather have, you know, a $800 credit score than I would $100,000 in cash. So credit actually needs, like, you have to have an introduction with credit. Somebody still has to let you in the door. So if I have an 800 credit score, but I don't have the income to support, doesn't matter. what, you know, it doesn't matter what credit score I had. They still want to see this income. So again, with cash, like you, and for example, because we're going to start to see at some point, not probably anytime in 2020, we're going to start to see foreclosures. We're going to start to see mortgage foreclosures. We're going to start to see tax sales, and they want to see cash. I mean, like, so that's something that you want to consider. So when you're looking to take advantage of the deals in the market, whether it's the stock market, whether it's the real estate market, you're going to need cash. So my suggestions to everybody is to get your cash up, reduce your debt, reduce what if you can. If you're liquid and you still have cash coming in, you know, find a way to kind of reduce your debt. Now, if you're not liquid, if you have a lot of debt, and you have a uncertain kind of money flow, like you don't know if you're going to get paid, you stop getting paid, then save as much as you can. Like that's really what my move is. And then when you also have the stimulus check coming in, and just for clarity, your stimulus check is going to be, it's based on your annual adjusted gross income, which is actually on it's not what you made. Everybody thinks it's like what you made, but your annual adjusted gross income, you know, will take some deductions off also. So if you're under $75,000 as a single person, you're going to get your full, I think it's $1,200. If you are, I should look these things up, so I offhand don't remember. If you're married and you don't have any children, then if you're married and you don't have any children, I think if you make $50,000, excuse me, between the two of you, I think you get like $2,400, and then it reduces from there. So, so basically you're going to have some kind of what I call throttle. So anything under $75,000, if you're single, you're going to get a full payment. Anything, but if you hit 99,000 or above, you're getting 100,000 and above, or $99,001, you're not getting anything.
Right.
So just kind of keep it that way. But also, I think with a lot of people, with small business owners do have an opportunity to apply for small business grants and loans through the Small Business Association. It's the disaster loan assistance through the Small Business Association, or a Small Business Administration. You can look that up on Google. It is available. It's a grant and a loan depending on what you qualify for, and depends if funds are available. But you can definitely go that way too if you are a sole proprietor, if you have some other things going on. So there is assistance for people. Now, do I think it's sufficient? Absolutely not. If you look at the 880 pages of the bill, which is the CARE Act, I was telling somebody, I was like, 5 reasons why the CARE Act doesn't care about us, because it's a lot of giveaways to corporations. It's a lot of movement in terms of changing the rules, like what we call the passive loss rules. It's changed that and it really affects, they really stuck a lot of love for corporations and the wealthy in this bill. So you're like, the stimulus for what? For who? Huh?
So this actually leads me right into the administration part of our conversation. I want to do a quick little stop here. If you have questions, we have a lovely little chat box that if you have any questions, you can go ahead and put that in there. We're going to do 10 minutes of Q&A at the end of this. So as we're talking, please feel free to put that in. Again, my name is Arlene Pitterson. I am the Director of Partnerships for Cannaclusive. And again, we are really here to help you and your money. And you may want to get in on some of these deals that you're seeing out here, whether it be stocks, whether it be investing in business, all these kind of things. So Courtney is here, the Ivy Investor, to really talk to us about what that really means and what that means for you. The next question actually goes right into the administration conversation, which I'm so glad that you were talking about the stimulus check. That is really not a stimulus for us. What should people be reading? Because you've already talked about how it affects an individual versus a business. And to be honest, guys, these things are moving every day. There's an additional, I literally was just going through the 880-page bill myself, because I do have several small businesses, and there were things I'm like, okay, this is not what they said literally last week. So literally last week, there was a whole other set of rules. So kind of stick to what the Small Business Administration is saying, because they seem to be kind of moving forward with a lot of the stuff and being the lead of things. But just to know there is going to be help, but you're going to have to hunt for it. That's really the thing that I would put out there. Beside what I'm saying, what about being fiscally and civically minded while we are trying to figure out whether or not we're going to get a $1,200 check or a $200 check or whatever the case may be? What do you say to that, Courtney?
Okay, so what do you mean?
So how important do you feel it is for people to be a little bit more involved with their administration locally, statewide, and now nationally? And how that ties into finance?
Well, I think a lot of people, and this is what I've heard across the board, is that people will say, you know, I'm not into politics. And I'm like, you realize politics will like dictate your money, and they'll dictate, you know, it dictates a lot. Now, you may not like the business of politics, or you may not like the drama of politics, but you certainly have to be involved at least to know what's going on in politics. So I do share that with people a lot. I like the New York Times for some good information. I like the Washington Post. Honestly, to be very frank, any newspaper that the president does not like, I'm like, you should probably read them. You know, so those are my personal favorites in terms of just figuring out what's going on. There's a lot of good resources. The New York Times provided, okay, cousin, what do you do? Like, what is your business? Like, what are you bringing to the marketplace? That's your first question. What are you doing? And then your next question is like, and it's kind of like, how do you differentiate yourself? But are you good at it? Like, what do you do in this space? I mean, yeah, you can sell donuts, but are you like the donut shop on a, you know, like the little, like, I don't want to say the little stand? Are you the donut shop in the stand? Which is fine. Or are you like the donut facility that's like on the corner that has a building? But here's the thing: are you the donuts with the stand, but your line is down the street? Or are you a donut stand with, you know, the same man that comes every day at the same time, and he gets coffee and he gets a donut because it comes for free, not because he likes your donuts? So it's really having those conversations about, what do you do? What do you bring to the marketplace? Are you good at it? And not only are you good at all those things, because you can be great at those things and still have a really crappy business model because you don't know how to run a business. And that's basically what's going on with these cannabis businesses and these investment streets.
Okay, that segue there. Thank you. Let's talk about cannabis business, because that's what some of these people are here for.
Yes.
Why should you consider investing into cannabis? And right now, is it a good time to be investing into cannabis businesses? I know this is a really broad question.
So I think to start with, why should you invest in cannabis at all? Why should it even be on your radar? Well, the first thing is that at some point, cannabis is going to be fully legal.
Exactly.
That's it. And I've said this to my students before. If anyone's ever taken my classes, I've specifically said, you know, history doesn't repeat itself, it rhymes. And you can look at prohibition. And prohibition, for people who don't know, was when the United States actually had a prohibition on alcohol. So you can look at, you can look at the bootleggers. We talk about the Roaring 20s. The 20s were only popping because of bootleggers and all the nonsense that was going on with them. So that's like, but doesn't that remind us of the world, you know, the war on drugs? You know, you make it illegal, and then you create and cultivate this black market, and then it becomes violent because, you know, that's that. So, and Mary she just made a really good point. I'm going to actually really get to that. So thanks, Mary, for bringing that kind of a little bit, kind of quickening it in the conversation. So here's the thing. So states at the end of the 20s, like mid 20s and forward, we're not fed. So let me back up. Prohibition started because it was a constitutional amendment. So, and then they also had a law that actually kind of enforced the constitutional amendment. Okay, fine. So what ended up happening is that New York was like, you're taking all of our money. And so they kind of went back and forth about, you know, prohibition, no prohibition, prohibition, no prohibition. They finally got together and said no. So that was the first thing. And then other states kind of started following suit. We're like, we're not doing this. We're not enforcing this. We don't have a whole bunch of, thank you, Jacob, is the Volstagg Act. Thank you. I can't, offhand, I'm like, yeah, I remember it, but I can't remember it. But yes, it was the Volstagg Act of I think it was done in 1920, but like the amendment was done in 1919 to take effect as of like January 1, 1920. So I share that to say all the states were like, we're not doing this, you know, go screw yourself. It's costing us more money to actually enforce this than it is that it's actually making us money. And then what happened? So then, you know, that was the end of the 20s. And then 1929, boom, you had a stock market crash. Okay, so now people don't have any money. And, you know, so they said, you know what, we need to do something because we can't tax people. You know, they don't have any income. What are we going to do? Okay, fine. We're going to have this 3-2 bill. We're going to kind of allow a little bit. So anything that's under 3.2% of alcohol, which is beer and wine or certain beers, certain wines, we'll allow it. And then right after that, you said, you know what? We're going to let the states handle this. This is not our business. Our bad, y'all. So but the thing that really kind of quickened the pace was the Great Depression. What are we in right now? The recession. So history doesn't repeat itself, it rhymes. So what's going to probably happen is they're going to say, you know what, we can't tax them no more, y'all. What are we going to do? We're going to give them something else for them to actually purchase that we can then tax. So we're here. Mm-hmm. And I didn't expect us to get here this quick. No, I did not. You know? But I said it was coming. And I've said it's coming because I saw that we were at a place in the market where we were that uneasy place and we were going to do the electric slide down. So I knew it. So I don't know what's going to happen and how quickly this is going to happen. But because we had the MORE Act that actually was pushed through committee in the House in late last year, which was Jerry out of New York and a couple other people were on and it was like the marijuana opportunity, something, whatever it's called. But it was a really good bill and actually had some equity provisions that were helpful. They weren't the be all end all. They didn't solve all the problems, but it was a good start. But at least they were able to kind of push it forward because that was the big idea. We're not getting it passed. It's not passing the House, but we need to at least start the movement. And I think we're starting to, that reminds me a little bit of the 3-2 bill. So I think maybe the next 3 to 5 years, we're going to be in a fully legal market. So that's why we have kind of like early adopters and we have like mid adopters and we have like regular people and then we have like late adopters. So we're still in the early adoption side and everybody's like, well, how do I make money? How do I make money? Is that you have to get in on the early adoption. Same thing, like for example, I'm not saying to go mess around with cryptocurrency, but if you got on cryptocurrency in like 2011, kind of put $1,000 in and see what happened, you were sitting pretty, 3 years ago. So again, it's about being that early adopter, but also we had a conversation about earlier, pets.com versus amazon.com. Pets.com is not here anymore. Amazon here is a behemoth. So again, sometimes you're not going to know which companies are going to do that, but I do want to talk about the Canadian companies before we go.
Actually, that's perfect segue. So what do you need to do to invest in cannabis? How do you need a broker? You just talked about the Canadian stocks. Kind of what is that 101 almost, like really quick? Some people here already know this, but just want to give people an idea, like you need a stockbroker to get cannabis stock in Canada, number one.
So no. So you don't need a stock. You don't need a broker itself. You do need a brokerage firm to work through. A lot of people like Robinhood. Robinhood and I had a little falling out a couple weeks ago. And I use them for my play account, but like my major accounts are at Merrill Lynch and E-Trade. So I like them as a facility, as a broker. I think they're great, but you can do all these things by yourself, DIY. I say sell a stock, buy a stock. You can do that all on your own, and you don't need somebody to do it for you. So that's the first thing. In terms of, what was your next question? I'm sorry.
You were talking about the Canadian stocks.
Oh, the Canadian stocks. So normally when you have a company that's traded outside the United States, a lot of times you're not able to purchase that company in the United States. However, there's, I think there's about 8 companies. We'll talk about these companies in a second. There's about 8 companies that are Canadian companies that are actually traded in the United States. Canopy Growth Company is the biggest. And then kind of from there, it kind of gets a little hazy in terms of who by market cap, and that's how we determine how big a company is. And market cap is short for market capitalization. So it basically takes the stock price times the number of shares available, and it gives you basically a value of the company that the market determines. That's what calls market capitalization. So Canopy Growth is number one. Then, people know me personally. If you've ever taken my classes, I personally like Kronos. So Kronos is number 2 by market cap. And then Aurora. So I want to briefly talk about Aurora. Aurora is actually, if you look at their numbers, they're under $1 per share, and they're traded on the New York Stock Exchange. Each stock exchange has its own rules. Most of the time, the rules are that you have to maintain above $1 share price. So it closed today at 88 cents.
Wow.
And so there's a rule about delisting. And so you have to, the delisting, which is basically being removed from the stock exchange, it starts if a company has 30 consecutive trading days below $1 a share. Now, Aurora was getting there, but it popped up on, it kind of dropped below $1 a share on March 9th, and then it popped up recent, and it kind of stayed that way. And then last week on the 27th, it went up to $1.03. It closed at $1.03. So kind of the 30-day clock kind of restarts. But CanTrust, which is another Canadian company, they're on the chopping block. Partially because of their price, but then also they haven't been doing their filings. And we've had some issues about kind of trusting their management. And that was, remember that conversation I had about the cousin? It's the same conversation you're going to have. You're going to kind of ask yourself about these companies, is the management competent? Like, yeah, you may have a great product, but if your management doesn't know what it's doing, it's not competent, it's not trustworthy. And that's what we have a problem in this space. If it's not trustworthy, then we have to leave it alone. So then you also have Tilray, and you have Forfria. So you have a couple of different stocks that are out there that are available to purchase in the United States. I'm very much, if I'm looking at a company, I'm saying, okay, well, who else is investing in you? Because they're probably gonna have a little bit more information than I do as a retail investor. So I just gotta, but I go, that's kind of where I start. I also like companies that we consider picks and shovels, that aren't necessarily touching the plant, but actually have plant exposure. So that's another conversation that we have. And then the people are saying, well, I'm not really comfortable picking a stock, but I really want to get involved in the space. And that's when we look at, what we call exchange traded funds, which are a basket of cannabis stocks. And there's a couple of those. There's maybe one or two mutual funds. I'm not a huge mutual fund fan. I would prefer an ETF because it's cheaper in terms of what we call the expense ratio, or basically the cost of actually owning it. And those are kind of the way I look at it. And then so we also have competition. So basically everybody said, alcohol, pharma, and tobacco are going to be in competition with cannabis. But we know if you're in the industry, that's not really true.
Right.
So
to go further into that, how does not having federal legalization affect cannabis stocks?
Well, so American stocks, so I remember I just talked about Canadian stocks.
Right.
There are American stocks that are publicly traded, but they're publicly traded in Canada. One of the rules of the stock exchanges in the United States is that you cannot engage in any illegal activity and be traded on the stock exchanges in the United States. So these companies that are doing business in the United States, that are United States companies, yes, they may be legal under their state, but they're not legal federally, at least if they're doing marijuana. So let me back up. I'm back up for a second. So here's the thing. So we had the Farm Bill of 2018, which legalized. So basically, they ended up changing the definition of, they changed the CSA. So the CSA of 1970 is the Controlled Substances Act of 1970. That's what made cannabis illegal. There were some other rules and regulations before that. It was the Marijuana Tax Act of 1937, and that was struck down by the Supreme Court in it's some kind of case, and I forgot. But it happened in 1969, and that's why they called it the Summer of Love. But then in 1970, Nixon came by with the Controlled Substances Act, and they specifically named cannabis. But in 2018, they had the Farm Bill that said, listen, we're going to change cannabis to marijuana. And because essentially cannabis has two branches considered legally. You have industrial hemp and you have marijuana. And it's the only difference between the two by the government standards, but to us, it's a little bit different. But it's 0.3% of THC. That's kind of the threshold. If it's under, it's going to be considered industrial hemp. If it's over, it's going to be considered marijuana. Now, what are you going to do with 0.3% of THC? What are you doing? Nothing. So it's kind of a very arbitrary number. I don't know who came up with it, but whatever. So that's the difference. But, under the Farm Bill, industrial hemp is now legal. So, but you still have, if you're doing a medicinal marijuana or even recreational, which I think is like 10 states, 11 states at this point. So they're still under what's considered 280E, which 280E is a IRS rule that if you are engaged in the sale or distribution of a Schedule 1 or a Schedule 2 drug under the CSA, which is the Controlled Substances Act, then you cannot take any deductions of your business. So even if I, as a cannabis company, I make $1,000 a month, but I have $500 in expenses, I have a profit of $500. That's what I would normally, in a normal business, that's what I would pay my taxes on. But not in cannabis. I have to pay taxes on that $1,000 because I don't get to take my deductions. So it really skews, in terms of getting back to your question, it really skews the business prospects and the balance sheet of these cannabis companies. So it just really makes it hard for it to, one, be sustainable, unless you have a lot of cash to be able to infuse it to get it to the other side. But then also it makes it really hard for investors to really see, like, hey, what's really going on? What is this really going to look like? I can't tell from your balance sheet what this is going to look like in a legalized market. And I think that makes it kind of a little bit more speculative than most.
Okay. Just to kind of cap this up, the investment class you do on cannabis, what are some key tips outside of what you've already talked about that you want people to take away in this conversation?
That education and research in the stock market educated investor is a good investor. And I think a lot of people get excited, but they don't do the research that's necessary for people to be successful. So educate yourself, do your research, do those things. So I think that's the first thing. The second thing is that you need to have money that's set aside, that you're not investing in the market with, that actually kind of put you through the hard times or whatever you need. And then finally, go with people that actually have been doing this for a while. Because I've noticed that a lot of people have been kind of just popping up like, oh, I do cannabis investing. I'm like, but do you? How long you been doing it? What's your conversation? So again, it's kind of like just vetting your sources. So I think those are the three things that I think beyond the obvious of, learning the stocks, things that you probably should take away from it.
So what are, as we continue our conversation, people, if you have any questions, this is the time to throw it into the chat. What are some of those resources that are more cannabis focused that people should be using for their research?
That's a really good question. I love you guys. I love Cannaclusive. Like, I have it as part of like the things that I have, like, what do I say? It's like, it's on Instagram, it's like, hey, Cannaclusive put up something. So I have you guys in my that I kind of see stuff.
As you get our notifications that we
have. Cannaclusive. I love Dashida Dawson's platform, the Weed Head, the Cannabis CEO. I look for women of color just to kind of have those conversations. I'm trying to think what else. Motley Fool is okay to get started in terms of the stock side of the cannabis industry. What else do I use? Google. I Google a lot. I use Google a lot. And I use Google to vet too. So I'll say, okay, I've heard of this thing. Let me go look on Google. What does Google say about it? I'm trying to think of what else I use. Bazinga is another one.
Okay.
And I think, so I'm trying to think offhand, like what other resources I use for cannabis. For stock market investing, my favorite book is One Up on Wall Street by Peter Lynch. The Intelligent Investor by Benjamin Graham is also another one, but it's really, really thick. It's like this thick. So I think those are my big things, but I do see some questions popping in.
Yes, let's go ahead and go with the first one.
Mm-hmm. Mm-hmm. Almost, no, I mean, like, no, that's a great question. And that's I mean, at the end of the day, how do you separate the real from the fake? One, I think you really have to, I think you just, if it doesn't sound right, it's probably not right. And I tell people, you have to understand what someone's giving you. So if you're having a conversation and you're like, what? And people feel like, oh, if I don't understand it, then it means like I'm going to miss out on it. And even if you don't understand it, and what if you do miss out on it? It's not the only thing that's going to pop up. Like, let's be very honest. So that's why I try to tell people on the front end, you got to educate yourself, because people, I mean, if you do some education, somebody will tell you something. You're just like, that doesn't make any sense, because, I did my research and I've been, seeing the same thing over and over again. And here you are saying something completely different that doesn't even follow the logic of all the things that I've read. So again, I mean, you have to kind of vet it against that's why you have to be an educated investor. Also, it has to make sense. And also get over FOMO. Like, everybody feels like, well, if I don't invest now, and that's another thing, if somebody kind of says, you got to do this now, got to do this now, got to do this now, run.
Exactly.
Like, that's the quickest thing I'm going to tell you. Like, if somebody like tries to like do the used car salesman, just know that you're probably going to get a lemon and just kind of just walk away quickly.
To go and continue that line of thought, multi-level marketing right now and cannabis or CBD is a very big problem. Please, if you can't get an honest review, or you can't find any information about said company that either has popped up on TV or somebody's Instagram and they say you should join them, but once you start doing the research, there is not enough information, run in the opposite direction. Please run in the opposite direction. There is nothing wrong with not spending your money. You do not, please make sure you understand, you spending $129, $250, whatever that number is, to somebody who says, oh, I can help you lose weight, get this business, whatever the case may be, that is not a real business. The real cannabis businesses have tangible products that they are trying to sell and get out into the marketplace. They are either with their Congress people trying to get legislation pushed, and they will ask you to help them with that. If they can't literally tell you things that we're saying here on this conversation of research this, give that, if they're evasive, if they're like, hey, well, let me get back to you, don't give these people money. Please don't invest into that.
Mm-hmm. Oh, yeah. I mean, I think that you just hit all of the points. Like, and Mary makes such a good point. Like, we are the most susceptible in these positions. And I just feel like and just not to be like super preachy, but like, let go of the poverty mentality. Like, let go of, I feel like, oh, I have to do something, or I have to or I'm going to miss out on something. Just let it go. Really just be a educated investor. And, again, if it's that good, it will still be around. If somebody's like, you have to do it now, like, why? Oh, it's going to happen. The price is going to go up astronomically in 6 months. Is it really? Do we know that? How do we know that? Can you tell me more about it? And then once you start asking those questions, and to your point about being invasive, if they can't answer, they don't have a good answer. And even if they have a good answer, make sure they can repeat the answer like 3 weeks later. It's all of that, because again, it's there's no rush here. I mean, it is a green rush, but don't you rush. So.
Exactly. Let's see, what sectors, we talk about cannabis, and cannabis is a big industry, right? People don't understand that it's not just the plant. There are factories that create the plant. There are hemp, it's CBD, there's all these different versions. What sections of the cannabis industry are you seeing some additional growth that people should look at?
The ancillary businesses. I really think the ancillary businesses are taking off. And when I say ancillary businesses, is companies or businesses that support the plant but don't touch the plant. And the reason being is that people feel like, oh, I want to get in the cannabis business, I'm going to go and be a grower. Are you a farmer?
Farmer. That means you're a farmer.
Right. Are you a farmer? Do you have experience? Have you worked with, like, I don't want to call it backhoes, but have you done this before? And if not, that's not your thing. And then people are like, I want to run a dispensary. I'm like, okay,
Have you ever run a store before?
Right. Like, and I mean, and also like, and that's another thing. It really bothers me that bud tenders don't have like real formalized training, but we'll get into that another day. But you know, that's another thing. So like, have you done retail before? Do you know about, you know, processing? Do you know about stocking? Do you know about all those other things? So, but there's a lot of people who have done marketing that are artists, that are attorneys, that are accountants, that can actually bring those, you know, those gifts and talents into the market. I mean, at the end of the day, you know, one of the biggest things that you need in cannabis beyond like, beyond, how do I say it? Beyond like the plant touching is the accountant. Because again, like we said, 280E is like a beast. And you actually have to have somebody who's competent that can work through it. So that's the first thing. And there's certain ways you can not get around it, but actually not put yourself completely, you know, under, you know, all the 280, like everything doesn't have to be subject to 280E if you do it a certain way. So that's one thing. But, you know, being an attorney, I mean, you need attorneys, you need lobbyists, you need all of these other people that are in other industries, because cannabis isn't just the plant. It's a universe. And as long as you think of it as a universe, you can bring your gifts and talents and be there. I mean, social media management in cannabis, as you guys know, is really hard, because every time you turn around, they're banning a hashtag. They're not allowing you to kind of promote it a certain way. So again, if you're able to take your gifts and talents from social media and bring it to the cannabis space, you're going to do very well. So, and that's kind of like on the individual basis. But then on the other side, you know, you have Scott's Miracle Grow, you have Cree, you have all of these other companies that are supporting the plant. And it doesn't really matter if the plant does well or not, is that they're still needed to kind of run the party. So that's kind of, those are the sectors that I'm starting to see really take off, because again, they're still needed, and it's kind of like what we call picks and shovels. So back in the day when there was a gold rush, you know, you still needed a pick and a shovel to go look for gold. That doesn't mean you're going to hit gold, but you still needed that to go mine for it. So same thing here.
Any other questions that we may have missed? Mary, do you have anything else you want to add? Double checking.
So I do see a question about the LLC or corp because of 280E. It depends. It depends on what you are doing. Because of the Tax Cut and Jobs Act, a lot of the old wisdom that we had about certain businesses being certain ways set up in certain entities, I should say, has changed a little bit. So it really depends on the type of business, and not just I have a cannabis business, but the type of business that you're running. In terms of, you know, how you should be separating your businesses out and doing your entity formation. So that's kind of like it. Unfortunately, it's an attorney, it depends answer. What else? What should people, Jacob asked a question, what should people be aware of when investing in plant touching companies versus ancillary? I think the biggest thing is that when you're looking at your plant touching companies, most of them are not going to be profitable. So the question is that how close you're going to have to look at their balance sheet and see how close they are to profitability. If they've ever had any profitable seasons. Kronos, I believe, has had maybe 1 or 2 quarters that were profitable. Actually, in looking at their balance sheet to see and it requires some work. Like, you're gonna have to look at their balance sheet. Anything in brackets means it's negative, just as FYI. But you have to look and see what's going on. And then unfortunately, because a lot of these companies are these companies that we're looking at that are plant touching, that are Canadian, they're filing what's called a 6K because they're Canadian based companies. So they're not what we're used to on the SEC website, and it doesn't provide as much color as I personally would like, in terms of it gives you their regular numbers, but a lot of their kind of the stuff that we're used to for American filing is not quite always there. So you may not get as much information as you need. So seeing how close they are to profitability is my biggest thing. Also, plant touch, ancillary business. Also, when you're looking at ancillary businesses, what is their sustainability? And also what I mean by what is their sustainability is that if something in the law changes, will this company still be viable? Because we are having a lot of changes in the law that will make some businesses flourish, and then other ones that will kill other ones. So that's why you have to be an educated person to say, okay, for example, we have MJ Freeway, which was purchased by a special purchase acquisition company, I believe last year. They do kind of like the back office of certain cannabis companies. They have I think they have contracts in 13 13 states. So I share that with you just as an example. I know I'm not telling you to buy anything, but just as an example to kind of see that that's an ancillary business. They kind of have a very niche space. So it's something that you may want to look into to say like, okay, even if, the rules change, this type of company may still be, operating and flourishing because of the work that they do. And also, like, is this a company that's like a singular company? Are there a couple of companies out there that does this? Or is this a company that is a very niche space that kind of really taken over this particular area? So those are things that I look at. Also with ancillary companies, like in terms of competition, are they profitable in their other spaces? So if I'm looking at a company, like an alcohol company that's investing in cannabis, like, is your alcohol company profitable? Like, what are you doing over here? So, and some of that profitability is going to allow me to know how much like free cash flow that they may have to actually put into a company and how they'll be managing this cannabis company, or at least their influence on this cannabis company. So that does help too.
We have another question. Okay, so the survival tips for small equity-owned cannabis businesses. What are some survival tips? Some states are moving to delivery only. What are some survival tips you would recommend, Courtney?
I don't know. I don't know. Like I'm a straight like investing person, and in terms of business, like I don't know. Like a lot of my other friends do like plant touching businesses that do delivery and things like that. I do not do that. That's not. I would probably say about 250,000 minimum. I, I mean, 250,000. It depends. I would probably be between however many partners you have. I would probably have that. And the reason being, it depends on the state rules. Some states actually require, I think Pennsylvania requires $100,000 in certain, that's in escrow that you can't touch. So that also limits like how much cash flow you have. So each state has a different rule. And then also they're saying there's a couple of states, I want to say there's one state, and I just don't remember which one it is that basically they're not changing their cash requirements, but they'll kind of give you some more check pluses if there's a limited amount of licenses that are available. Does that make sense? So it's not like, oh, we're going to help you with your cash requirements. You're going to have to have those cash requirements. But if we have a lottery, you're going to be pushed up in the lottery because you have equity social equity aspects. Does that make sense? So it's a lot. I mean, in each state is very, very different. Mhm. Please, me. Mhm. Mhm. So I tell people it's whatever you're comfortable with losing. Like if you never get this money back again, like are you okay? Or is it going to are you going to be eating ramen for the next 3 months if this doesn't work out? So if you have the money, if you can lose the money, then that's the money that you can put into the market. In terms of what to be looking at in the market, at this point the market is so crazy. I tell people generally, if you're in a downturn, you're looking at defensive stocks. You're going to be looking at companies that sell toilet paper, that sell makeup, that utilities, telecom. You have, when I talk about telecom, you have the 5G revolution that's coming. It's coming whether we like it or not. So also looking at kind of those types of cutting edge places for you to put, to do your investing in there. So I think that answers the question kind of, maybe. So defensive stocks, I tell people that I've been doing options, which are basically betting on stocks, betting on plays, betting on positions. Like I did what's called a put on MGM 2 weeks ago. Basically, I bet that MGM was not going to do well, and it did not. So those are the things that I suggest, especially in this market. It's very choppy. It's very uneven. And like I said, I'm pretty sure that we have not hit the bottom. The bottom in our last recession took 6 months. I think it's going to be a lot longer because we have supply chain issues. We have unemployment that has quadrupled over the bottom of the Great Recession. The peak of the Great Recession, it's quadrupled that already. So I think this is going to be a longer kind of time frame, which means the market downturn is going to be longer too. So, kind of consider those things also. And that's not for me to encourage you to time the market, but just be smart about what you're doing.
Okay.
So no, I did talk about that briefly. And like I said, it really depends. It depends on what exactly your business is, how you're doing it. And like I said, the Tax Cut and Jobs Act has changed kind of some of the things that we think, I would say, like our old thought process. So it's just really, you have to look at the company structure. And it depends. You could probably do a split sometimes. Sometimes you do a split of the company. Like, yes, it's one company, but you have some things that are going to be your plant touching. That's your 280E issue. And then your other aspects are not necessarily related that you can take that's not going to be applicable. 280E is not going to be applicable. So you can take your regular deductions, but it really depends. It talks about structuring.
So
the question about travel-based stocks, I think.
Yeah, airlines, cruises.
Yeah, I shorted a cruise line the other week. So that's why I feel about it. When you go long, that means you think the company's going to go up. When you short, you think it's going to go down. Same thing with kind of the options. You have a call up, put down. So a lot of the travel-based stocks are not doing well because people aren't traveling. I did, like I said, with the cruises, I definitely did. Well, actually I did a put, not a short, but I did a put on a cruise line. Because it's just they're not going to be doing well. They're not going to be doing well for a while. And it's a function of kind of the pandemic, but it's also a function of people are not going to have the discretionary income that they once had to actually take the cruises and the travel and do all those types of things.
And just really quick, could you talk to how can you do a margin call, or like you need to do that within a brokerage, right? You need to call.
Yes. So how you do options is just like you would buy stocks. Robinhood is a really good platform to do that. E-Trade's a good platform to do that. But that, again, those are like 302 type things. Like when we're having these conversations, this is like investing 101. Like that's like investing 301 or investing 302. Like that's something that you do once you've been in the stock market and you've been kind of investing for a while. That's kind of how you want to, kind of step up your game. But that's also something that you need to take some classes on, because it's not something that you learn, in school. It's not something that you just pick up in passing. It's something that you actually have to really understand what you're doing, because you can lose a lot of money. I lost like $400 today. I was a little annoyed. So, I've been doing this for quite some time, and you still lose money. And that's what I'm saying. When I say to people, like, you have to be okay with losing some money, and not that you're reckless with it, but just sometimes the market just goes in a direction that you're like, how did that happen? I wasn't looking at, my chart didn't tell me that. So those are things to consider. So I think that's everything.
I think that's it. Mary, Courtney, thank you so very much for your time. Could you share with how people can get in contact with you?
Yeah, so you can always find me on Instagram at the Ivy Investor. You can find me. My classes are available at the Ivy Investor on Teachable, which I will just type in. And then you could also find me on Facebook. So, I'm pretty much around. I've been thankfully trying to educate people just on the basics of the market, because there's so many things that we're like, that never happens. And look, there it is. So like the circuit breakers that have happened, like, I guess maybe about 6 times in the last month. And they've been insane. Like, I feel like they've only happened maybe 3 times before that, like before this, you know, and every time we turn around, circuit breaker, circuit breaker, circuit breaker.
Yeah.
Okay, so the circuit breakers, so let me back up. So in 1987, there was Black Monday, or was it Black Friday? I think it was Black Monday. Oh, they all blend. Monday. It was Black Monday. Black Monday, and basically they call it a computer glitch, but no, it really wasn't. But whatever. There was a computer glitch that actually caused the market to crash and basically go down 23% in one day. And like, it was crazy. People were upset, and they were like, hey, you know, we want that never to happen again. So what they did is they put in what's called a circuit breaker. And a circuit breaker is it's based on the previous days, trading days, S&P close. So if the market opens or anytime during the trading day, it drops 7%, the S&P drops 7%. Let me back up to S&P. The S&P 500 is a index of the top 500 stocks that are traded in the United States. So it's kind of like a broad market index. So it's kind of like a snapshot of the market. It's not all the stocks, but it's like the biggest stocks, the stocks we care about: Microsoft, Apple, Boeing, blah blah blah, all of those. That's what the S&P is. So they're looking at what the S&P closed at the day before, and if it drops 7%, because that's like a fast drop, they're like, oh no, everybody stop, y'all are wilding. We're going to put you on a 15-minute timeout. Go to your corner.
Exactly.
So, but then if it happens again and it drops 13% from the previous S&P, the previous day's trading, they're like, up, you cut up again, go to your corner. Now, if it drops 20%, then the market is completely halted. That's called a level 3. So it's a level 1 is 7%, level 2 is 13%, a level 3 is 20%. It's never hit a level 3. But basically that's kind of what the process is, just to it's basically, because remember, like, selling off in those manners is like fear-based. So it's kind of just like, you know, when you're fighting, you know, when you're getting in a heated argument, sometimes you just walk away from the argument to kind of clear the air. Same thing here. It's like, okay, let's get this fear level down. Why don't we give you a timeout so you can get your thoughts about you, and then you can come back and see if you can play nicely. Now, if you can't, then we'll put you on timeout again. And that's pretty much, so it's basically trying to slow down the progression. And that's what the circuit breaker is. But to your point about how historic this is, I think before this, the circuit breaker came on in like 93. And
And that was it. I think it was
yeah, I think that was it. And so even when the stock market crashed in 08, like, the circuit breaker didn't hit. So again, to put that in perspective, but for now, we've had the circuit breaker go off like 5 or 6 times in the span of like 2 weeks. That is insane. So I think part of it is that a lot of our trading is digital, and so it's just really like, you don't even have to really think about it. Like, okay, I'm going to sell the stock right now. Like, you put the chip and you're done. Before, it took a little bit more time. Even I can tell you, like, putting in a trade in 08 and putting in a trade now, it's kind of like it's cut in half the time. So I'm not thinking as much. But it just tells you, one, about the level of fear that's going on in the market, the level of uncertainty in the market, and that it's also letting us know is that because every time something happens, and if you notice, when the president was speaking, the market would go down significantly. So it's every time, like, if you feel uncomfortable, people are just going to start selling off. So just kind of keeping that in mind, that we really haven't hit the bottom. Until we can get this pandemic under control, we have not hit the bottom. That was the beginning. The So the bottom, so people are taking the crash, which is the beginning of the drop, as the bottom. So because I want to put that perspective. So again, you can only tell what the bottom is by looking backwards. So nobody knew in March of 09 that that was the bottom. And remember, I said the crash happened in September of 08. So it took us 6 months to actually stop the bleeding. And then at that point, we didn't even know until, like, I want to say nobody really caught up to what was going on in March of 09 until about June or July of 09 that we're like, oh, okay, we're starting to really go up. But then also remember is that the problem of what caused the crash actually was starting to dissipate in the beginning of 09. We don't have that same dynamic here either, because we don't know when, until they're able to say we have this completely under control and they actually mean it because it's truthful. Because remember, we've been told that a couple of times and we know that not to be the case. So until they're able to get that together, I wouldn't even look for a bottom. Like the bottom ain't here. You know, it's kind of like we might be on the first floor, but just please know that there's a sub basement. There's not just a basement, but there's a sub basement, and we can definitely hit it. So, and that's going to start happening because again, we're not even feeling the economic effects as it pertains to these companies. We won't see that probably for another two quarters, because again, we're looking at, I mean, and like we said early in the conversation, and I just want to look at my notes real quick. I mean, this thing exposed all the things that were wrong in the economy, is that we had heavy reliance on China. So our supply chain is messed up. So our supply chain was cut off in the beginning of January, and it hasn't really even been restored. And now we're 2 months in. So you're basically looking at 2 quarters of being behind in your supply chain. So that's the first thing. So again, where's your bottom if you still don't know what kind of damage that this has done to the supply chain? Your second thing is that a lot of companies have been, just being irresponsible with money. They've been, irresponsible debt wise. But you won't see that until their sales drop and they actually have debt, service that needs to be taken care of. But then also they were doing these stupid buybacks. So they were also artificially inflating their stock by removing some of their stock on the market. So basically, if I have 100 shares in the market and I buy back 50 of them, so now I have 50 shares, my price is automatically going to go up because I have less shares in the market. So they were doing that instead of like creating a stockpile of cash. And then finally, we have a student debt issue. We have a student loan debt crisis that's not going to get any better. Like stopping them or, putting them off until September just kind of, puts off the inevitable. So we have a lot of different things going on that haven't kind of percolated to the top yet. And until those things percolate, the bottoms, and like I said, you're only going to be able to know the bottom until you look back on it.
Do you have a understanding based on your opinion? I feel like, I'm sorry, I'm going Oprah with this.
Uh-huh.
Given from your expert opinion, mm-hmm. Will this stimulus package even hit? Will it do anything?
No. I mean, let me clarify. For the average consumer, absolutely not. I'm pretty sure they're going to have to revisit this for the average consumer. One, I think it was cobbled together quickly before we actually knew the extent of the damage, and that before we knew anything. So that's the first thing. Second of all, I've actually gotten a chance to get through maybe about 50 pages of the 880 page document, and also most of it is for rich people and corporations. So again, we're not going to feel much relief in this at all. And at the end of the day is that, you have people that were never really affected poorly in 2008 are now going to be affected. And it's just kind of, it's just, you're going to have to revisit it. The stimulus package is not going to do much of anything long-term. And we're pretty much stuck with it. So, yeah.
Really quick, and I know we're over time, so thank you for kind of sticking on. The strikes that have been happening, Amazon some Amazon workers went on strike, Instacart workers went on strike, and I'm forgetting somebody else went on strike. I think some Walmart employees might have went on strike. What, if any, effect do you think that will have on either the business or the actual help to the employees? I have my own opinions, but I'll let you start.
Well, I think at the very minimum, it's bad press. I mean, so I think it's like the very baseline, it's bad press. But I also think to the business, I think a lot of like we were talking about separating the real from the fake. I think a lot of these businesses and their core practices are going to be exposed.
Yep.
And I think that's the beginning of it, because again, you know, to the people, I mean, I really was reading about Instacart because I mean, I was like, oh, I really like Instacart. I just like the concept. And I was like, so you're going to have them around people, you know, throughout the day without anything.
They're not reimbursed for what they're utilizing to go and protect themselves.
Mm-hmm.
They are responsible for protecting themselves. And they are not even being able to, like, they're not even given any resources in order to protect themselves, period. So if I can't afford to buy, or I can't find Lysol, hand sanitizer, a mask, and I still have to go out into these streets and deliver you food,
Mm-hmm.
I'm now a contagion. I might be infecting you because I'm around all these people. So that's an issue right there. And Amazon, it was Whole Foods. Amazon workers at the warehouse and Whole Foods workers at the store in New York were striking as well because they're not getting, they're getting penalized for taking time off because they're feeling sick. So these are all these things that, like you said, will expose these companies for, you say you are basically, you know, kumbaya, happy-go-lucky, everybody's good, everybody's fine, and it's not the truth. Because if I were working at the Amazon warehouse and I know Becky has been coughing over these boxes for the last 3 days, and I don't have a mask because you won't give it to me, you are now creating a firestorm and you are infecting more people.
It's a hostile work environment.
Correct.
It's a hostile work environment that you're creating. And it really kind of makes me sad because I don't feel like under Whole Foods, as it was managed as Whole Foods as its own separate company, that it'd be going down like this.
I agree.
And so that really hurts, if that makes sense, because I was always very much a Whole Foods like proponent, because I felt like they actually cared and I just really trusted them as a company. And not that I'm not making any comments about Amazon or whatever I feel about Amazon. I mean, it's just not that big, but I just feel like the whole idea of the dynamic shift. I mean, it sounds like they're more operating like a Walmart than they are like what we know to be like a Whole Foods. Yeah. And it's a very sad situation. But I think in terms of moving and striking, it's like you're going to have to do something. Because at the end of the day, we're talking about supply chain. Like, oh, these people are like trying to get these things together. They're trying to get their packaging together. They're trying to get you out the door. So if part of your supply chain goes down because you're not, you know, basically taking care of your labor, you're just out of luck. In terms of, I think Jacob said that Macy's and Old Navy are already kind of laying people off. That same thing that's going to happen across the board. You know, people aren't coming in. And Macy's has actually done really poorly for the last 10 years because they just have not been able to update into the digital realm. So I think there's a lot of exposure that's going to happen, you know, exposure on both sides, exposing to the pandemic, but then also exposing kind of all the bad things that have been going on or the things that just have not been quite right.
And with that, I think I want to give, you know, we have really gone over time, but thank you so much for that. I think this is a great conversation. I think we should figure out a way to do a little bit more of these because it sounds like we have some time on our hands and we should be educating ourselves a little bit more. Mary, do you have anything else you'd like to say? Mary's still there.
Thank you all so much. We really appreciate it. Sorry, Arlene. Please come back. We're going to do this once a week. We have a few other things launching, like Keep Your Peace this Wednesday. Yep. So thank you. Thank you so much. Thank you to everyone who joined us. Please be safe. Stay at home. And Courtney Richardson, the IV investor, please follow her. Please contact her for her consultation. She is busy, but she is definitely worth every penny if you're trying to figure out your next steps in this current new economy. Thank you again, Courtney. Thank you, Arlene. That's it. Thank you all. Be safe.
Good night. Wash your hands.